We have been discussing how to prepare financial statement based on trial balance, solve proprietorships. I think there are 12 lessons we have to discuss on the financial accounts, and there are 4 lessons we have to discuss on the management account parts. All the business organization to provide information to the interest party, financial statements should be prepared. Therefore, we are going to discuss how to prepare financial statement based on trial balance. Right, this is the trial balance. It is given for the year end 31st March 2025. Right, trial balance available assets, liability, income, expense, as well as equity. Income and expense should be recorded income statement. Assets, liability, and equity should be recorded in the financial position. Right, given trial balance, it has given values in 1000. Right, thing adjustment when preparing financial statement based on trial balance, adjustment should be complete. But from the beginning, interrelated adjustment, if it is given, should be done from the beginning. Example, if it is given sales invoice, complete omitted. If it is given goods sent on sales or return basis. At the same time, inventory as well as bad debts and doubtful debts should be done from the beginning. When adjustment කරනකොට මුලින් ඉඳන් කරන්න බෑ. මුලින්ම අපි කරන්නේ interrelated adjustment. Think in this example, it is given there are 12 adjustment. There are 12 adjustment. First one is stock donation. Second one is stock drawings. Third one damage stock. Fourth one EPF and ATF. 5 very important. Goods sent on sales or return basis. And 6 disposal adjustment. 7 prepaid expense. 8 depreciation adjustment. 9th one bad debts and doubtful debts. 10 sales invoice complete omitted. Think 10 should be done from the beginning. Sales invoice complete omitted. And 11 it has given inventory adjustment. Think there are 3 marks. Cost of inventory and net realizable value of inventory also given. But last one, 7th one, accrual expense adjustment. In this example, given there are 12 adjustment, right? From the beginning, interrelated adjustment should be done. Example, sales invoice complete omitted. In this example, 10th one should be done from the beginning. 10. At the same time, goods sent on sales or return basis, additional 5. 10 මුලින්ම කරන්න ඕන. Then additional 5. Relevant for goods sent on sales or return basis. At the same time, inventory adjustment and given inventory additional 11. 11 should be done after that. Those are called interrelated adjustment. And at the same time, bad debts and doubtful debts also. It has given bad debts and doubtful debts additional 9th one. Any organization, it may be sole proprietorships, partnerships, as well as company also, when preparing financial statement based on trial balance, adjustment should be complete. From the beginning, interrelated adjustment should be done. Right, think about additional 10. At first one, draw the format like this. This is the way you have to prepare formats. Income statement. It has given Bharti Enterprise, name of the business, based on entity concepts. Before answer the question, prepare the format like this. First one, Bharti Enterprise, name of the business. Income statement for the year end 31st March 25 based on periodicity concepts. Then sales minus sales return. Prepare the format like this. Then think cost of sales calculation. Opening stock plus purchase plus carriage inwards plus import duty plus loading unloading cost minus purchase return outward equal purchase return. Then can we calculate goods available for sales. From that value should be deduct damage stock drawings, stock donation, and closing stock based on matching concepts. Gross profit can be calculated, then plus other income, space for other income, and expense should be categorized as a sales and distribution, administration, other, and finance. Therefore, you have to prepare format like this. Then the statement of financial person also. Statement of financial person, Bharti Enterprise name of the business, based on entity concepts. Based on entity concepts, name of the business. Statement of financial position as at 31st March 25. Non-current assets, cost, accumulated depreciation, net book value, then think current assets, and equity, opening balance, plus profit minus drawings. Then liability also should be divided by two parts, current and non-current liability. Therefore, this is the way you have to prepare format from the beginning. Then interrelated adjustments should be done. Right. Think first one, sales invoice complete omitted. Sales invoice complete omitted. This value debtors account debit, sales account credit. Trial balance available, debtors and sales. Prepare the ledger accounts, record given balance as a BBF. Debtors account balance available. Therefore, think how to prepare workings also. Debtor trade receivable, it is given balance, and sales account also given balance. Sales account balance. Those values should be recorded as a balance brought forwards. Sales invoice mean credit sales, effect for data increase and sales increase, but those are not recorded, completely omitted. Then think goods sent on sales or return basis. It is effect for data, sales as well as inventory. Think additional 5, goods sent on sales or return basis. Cost per is given 450. Invoice price equals 780. At the end of the accounting periods, 40% of goods were remain. It means 40% not sales. Given cost value and given selling price, but 40% remain. It means 40% not sales. Those are not recorded yet. Therefore, it is effective for data and sales also. At the same time, bad debts and doubtfuls also should be done. And think inventory adjustment also given additional 10. මෙන්න මේ adjustment එක කරනකොට එකට කරන්න ඕන any organization. It may be sole proprietorships, it may be partnerships, it may be company. Right. Prepare the workings. You have to prepare debtors accounts, sales accounts, bad debts accounts, doubtful expense accounts, allowances for doubtful debts. Think about goods sent on sales or return base also. Given cost value, selling price also given, but those are not recorded yet. 40% of goods will remain. It means 40% not sales. Right. Prepare the workings. Debtors accounts, sales accounts, bad debts accounts, doubtful debts expense accounts, and allowances for doubtful debts. Think interrelated adjustment. From the beginning, try to complete additional information. 10th one. On මුලින්ම 10 කරන්න ඕනේ. After goods sent on sales or return basis additional 5. And inventory adjustment additional 11. As well as bad debts and doubtful debts, it is given additional 9th one. Those are called interrelated adjustment. Interrelated. Right. Prepare the ledger accounts. Effect for data. Therefore, prepare debtors accounts, sales accounts, and bad debts accounts, as well as doubtful debts expense accounts, bad debts, doubtful debts expense, and there are 5 ledger accounts: debtor, sales, bad debts, doubtful debts, and allowances for doubtful debts. record values in million, debtor assets, then bad debts and doubtful debts expense, as well as you have to prepare sales accounts and allowances for doubtful debts. Right, think sales invoice complete omitted additional 10, record values in million, first one record given balances as BBF, think sales account balance is given 79 million 180, balance brought forward credit side. Then data also given, this is the trial balance, data balance 8180, debit side BBF, and bad debts 343,000, those are available trial balance. And allowances for doubtful debts, asset account but vacancy credit balance, reason effect for asset decrease as a balance brought forwards credit side. Right, like this, prepare the ledger accounts and record given balances as a BBF. Those are adjustment. Then think additional 10th, 352 million worth of sales invoice completely omitted. Think about 10th one. Sales invoice mean credit sales, complete omitted, effect for debtor and sales. Value equal 352 million. 352 million. Debtors account debit as a sales and sales account credit as a debtor 352 million. Sales account credit as a debtor. Think debtors account debit, sales account credit, double entry. Sales invoice complete omitted. Then think additional 5, relevant for goods sent on sales or return basis. Additional 5, goods sent on sales or return basis. Given cost value 450,000, selling price is given 780,000. Think goods sent to the other business on sales or return basis, you have to know how to record. Given cost value and selling price is given, but those are not recorded yet, not recorded. And given 40% of goods were remain out of sales or return based stock. Right, 40% remain, it means 40% not sales. It means 60% sales. Therefore, first one based on selling price, 60% should be considered as a credit sales. Based on selling price, 60% should be considered as a credit sales. 40% remain, it means 40% not sales. It means 60% sales. Therefore, this value should be considered as a credit sales. As well as 40% not sales, therefore, think cost value is given. Based on cost value, 40% should be considered as a closing stock. If it has not sales, its cost value should be considered as our inventory. Therefore, 450,000 into 40%, value equal 180. That value should be considered as inventory. Think goods sent on sales or return basis. At the time of send, those are not recorded, but 40% remain. It means 40% not sales. It means 60% sales. Therefore, based on selling price, 60% should be considered as a credit sales. 60%. But it's a double entry. Debtors account debit 468,000 as a sales and sales account credit 468,000 as a debtor. Those are not recorded yet, but end of the accounting period, 40% not sales remain. It means 60% sales. Therefore, based on selling price, 60% should be considered as a credit sales. And based on cost value, 40% should be considered as a closing stock. At the same time, inventory adjustment should be done and given inventory additional 11. Think about additional 11. Inventory adjustment should be done at the same time. Inventory divided by two parts. cost value and net realizable value. Think additional 11, cost of inventory is given 490, but net realizable value is given 495. Think goods sent on sales or return basis. If those are not sold, its cost value should be considered as our inventory. Therefore, this value should be added both cost and net realizable value. Therefore, this is value should be considered as inventory. This is value should be considered as inventory. Think 490 plus 180. Therefore, here value equals 670. And think net realizable value also 675. Think based on matching concepts. As an inventory should be recorded this value under cost of sales calculation. Cost value, but NRV higher than the cost value. Therefore, based on prudence concepts, financial position also as an inventory should be recorded 670 based on prudence concepts. Based on matching concepts, under cost of sales calculation should be recorded as a closing stock cost value. Based on prudence concepts, lower value of cost and NRV should be recorded under current assets. Therefore, this is value should be recorded under cost of sales calculation. Cost of sales calculation as well as under current assets, same value. There is no stock written off. NRV higher than the cost value. Therefore, stock written off should not be recognized. As inventory under current assets should be recorded cost value, and under cost of sales calculation also as a closing stock should be recorded cost value. Think inventory adjustment could send on sales return basis, inventory, sales invoice complete omitters. At the same time, additional 9 bad debts and doubtful debts. Think at the same time bad debts and doubtful debts also. Think those are called interrelated adjustment. Additional 9, it has not given bad debts in the adjustment. It has not given bad debts in the adjustment and given balance of allowances for expected losses on trade receivable as at 31st March 25 should be 10% of the remaining balance of trade receivable. Think about additional 9. Not given bad debts in the adjustment. It has given only trial balance. Bad debts equal impairment loss on trade receivable. Right now, closing balance of debtor should be calculated. Closing balance of debtor should be calculated. Think debit side total amount equal 9,000. Take the same value credit side. Difference value as a balance carry down. Think closing balance of trade receivable equal 9,000. Therefore, doubtful debts should be calculated based on remaining balance of trade receivable. Therefore, based on this value 10% equal, remaining balance of trade receivable equal 9,000. Based on that value 10% equal 900. Therefore, this is a value should be considered as a doubtful debts. But think allowances for doubtful debts on opening balance available. Therefore, you have to recognize under provision or provision. Think opening balance equal 460, but closing balance should be equal 900. Opening balance is lower, therefore difference value should be considered as a doubtful debts. On මෙතන balance එකක් තිබුණොත් difference එක තමයි record කරන්න අපි. Right. This is the way, very important this part. Think doubtful debts normally, doubtful debts expense account debit, allowances for doubtful debts credit double entry. But if it has given opening balance, you have to recognize under provision and over provision. Right. If it has given opening balance, calculate value should be recorded as a closing balance. As a balance carry down 900. Same value should be recorded credit side as a balance brought forwards 900. Think opening balance available, closing balance should be equal 10% of the remaining balance of trade receivable. Therefore, that value should be recorded as a closing balance. If there is a difference, that is a value should be considered as a doubtful debts. It may be under provision, it may be over provision. Therefore, think debit side increase, value equal 900. Take the same value other side, credit side, difference value 440. Therefore, this is value should be considered as a doubtful debts. Allowances for doubtful debts account credit and doubtful debts expense account debit. As allowances for doubtful debts. Think bad debts and doubtful debts. Debtor 9,000 closing balance. Allowances for doubtful debts closing balance equal 900. Should be recorded under current assets. Debtor minus allowances for doubtful debts under current assets. Bad debts and doubtful debts should be recorded under sales and distribution expense. And the sales account closing balance. Sales account, sales is income. Should be recorded income statement. Sales account should be closed. Credit side total amounts. Think sales is income. Therefore, should be closed. Credit side total amount equal 8,000. Therefore, this is value should be recorded income statement as a sales. As a income statement 8,000. Think how to record on the financial statement. Inventory NRV higher than the cost value. Therefore, there is no stock written off. Here 2 marks. And think bad debts and doubtful debts should be recorded under sales and distribution expense. Debtor minus allowances for doubtful debts. Think about closing balance. As a debtor 9,000 minus as allowances for doubtful debts 900. Then sales is income should be recorded income statement as a sales. Right, record on the financial statement. Think those are called interrelated adjustment. Any organization should be done from the beginning. Any organization. Then record on the financial statement. Think how to complete interrelated adjustment. Record those information on the financial statement. First one, you have to know how to prepare work in any organization. Those are relevant for partnership and company also, not only sole proprietorships. Right, record those information on the financial statement. Sales should be recorded income statement. Sales. Think sales will be equal 8 million. Record values in million 80,000. This is income statement. And closing stock cost value should be recorded here. Think about inventory adjustment. Cost value equal 670. And bad debts and doubtful debts should be recorded under sales and distribution expense. Bad debts and doubtful debts. Think bad debts will be equal 343. As well as doubtful debts. Think doubtful debts. Under provision available 440 under provision. There is no stock written off. If it is given stock written off should be recorded under the expense. Stock written off not available. Then under current assets, as an inventory from the beginning, based on prudency concepts, lower value of cost and NRV. In this example, lower value also cost value. Then think data also. Data equal trade receivable. From that value should be deduct allowances for doubtful debts. Allowances for doubtful debts. Allowances for doubtful debts. Allowances for doubtful debts equal allowances for expected losses also. Think data closing balance equal 9,000. From that value deduct closing balance of allowances for doubtful debts. Therefore, the net value should be recorded second column 8,100. Think how to disclose on the financial statement any organization. It may be partnership and company also same way. Think those are adjustment. Right, bad debts and doubtful debts. You have to know how to disclose on the financial statement. Think inventory, debtor and allowances for doubtful debts. And think bad debts and doubtful debts under sales and distribution expense. As well as closing stock under cost of sales calculation should be record cost value. As well as think about sales. But if NRV lower than the cost value, difference value should be recorded under other expense. Those are called stock written off. But in this example, there is no stock written off. Right. We have discussed already additional 10, additional 11, additional 5, as well as additional 9. Now try to complete EPF and ETF additional fourth one. EPF and ETF adjustment additional 4. First one recognize given salary also net or gross. Additional fourth one try to complete now. Fourth one relevant for EPF and ETF. Additional fourth one. And given company, the employer contribution for EPF and ETF 15%, 5%, as well as employee contribution for EPF 10%. Both employer and employee contribution for EPF and ETF has not been recorded. Very important, employee contribution. You have to decide given salary gross or net. It is depend on employee contribution for EPF. Employee contribution for EPF has not been recorded. Think employee contribution, double entry, salary account debit, EPF payable account credit. If it has not recorded, trial balance it has given as a salary, net salary. net the gross දෙකලා හොයාගන්න අපි මෙන්න මේ employee contribution for EPF record කරලාද නැද්ද කියලා බලන්න ඕන අපි. මෙන්න මේ employee contribution record කළොත් තමයි gross salary එක එන්නේ. ඒ කියන්නේ salary account debit, EPF payable account credit. It has not recorded yet. Therefore see the trial balance. It has given salary here. Think salary 6,300. This is the net salary. Reason employee contribution has not been recorded. Has not been recorded. Therefore, trial balance available as salary, net salary. Think how to decide given salary net or gross. It is depend on employee contribution. See the trial balance salary available 6.3 million. And given percentage employee contribution for EPF has not been recorded. Sometimes it has given EPF contribution of employee has been recorded. In this situation as a salary available gross salary, but in this example it has given net salary. Right, prepare the working for EPF and ETF. EPF both employee and employer contribution. Given salary net or gross. If it has given net salary, think how to calculate gross salary also. Right, additional fourth one, relevant for EPF and ETF. Think all the business organization available employees. Therefore, this is a legal requirements. You have to know how to calculate EPF and ETF and think how to record in the ledger account also 5 marks. Those adjustment available any organization, not only sole proprietorships, employee available all the business organization. Think EPF and ETF fund maintained by the central bank each and every month based on salary of the employee should be transferred to the central bank. Think about additional fourth one workings. First one EPF divide by 2 parts. Employee and employer. Employer mean business 15% as well as 10%. But ETF only employer give their contribution. ETF 5%. Think given trial balance gross salary, so net salary. How to calculate net salary? From gross salary, deduct EPF employee contribution. EPF employee contribution. Then answer is the net salary. Answer is the net salary. Think trial balance it has given net salary 6,300. How to calculate net salary? From gross salary, deduct 10%. If gross salary equal 100, 10% should be deduct from gross salary, balance part equal net salary. You have to know how to calculate gross salary based on net salary. Only 10% should be deduct from gross salary. Therefore, this value divided by 90 into 100, gross salary can be calculated. First one, you have to know how to calculate gross salary. Think divided by 90 into 100. Therefore, 6,300 net salary divided by 90 into 100. Therefore, this is a gross salary equal 7,000. Think how to calculate gross salary. Then gross salary equal 7,000. Based on gross salary, value should be calculated. Think 7,000 into 10% equal 700. 7,000 into 15% equal 1,050. As well as 7,000 into 5% equal 350. This is the way you have to calculate. Then think how to prepare ledger accounts, salary accounts. Think salary account balance available, EPF expense accounts and EPF payable, as well as ETF expense accounts and ETF payable accounts. Prepare the ledger account like this: salary accounts, EPF expense and EPF payable, ETF expense as well as ETF payable. File ledger accounts. Think gross salary equals 7,000. Gross salary equals 7,000 minus 10% employee contribution equals 700. Therefore, think net salary. First one, you have to know how to recognize gross or net. If it is given net salary, think how to calculate gross salary. Based on gross salary, value should be calculated. Then trial balance available salary account balance 6,300. That value as a balance brought forwards. Think how to record in the ledger accounts. Employee contribution 700. Salary account debit. EPF payable account credit. Employee contribution. Salary account debit, EPF payable account credit. But employer contribution, EPF expense account debit, EPF payable account credit. Employer contribution, another expense of the business, but employee contribution part of salary. ETF also only employer. Think ETF also only employer give their contribution. Employer mean business give their contribution. Another expense, ETF expense account debit 350 and ETF payable account credit 350. 5 marks. Salary, EPF, ETF expense should be recorded under administration. Think salary account balance equals 7,000. Expense and administration, EPF payable, ETF payable under current liability. Think ETF payable balance equals 1,750. EP payable, ETF payable under current liability. Think given salary from the beginning should be recognized gross or net. If it is given gross salary, think how to calculate net salary. If it is given net salary, you have to calculate gross salary. Then based on gross salary value should be calculated. Then think how to record in the ledger account also. Salary account balance, it has given trial balance. That value should be recorded as a balance brought forwards. Then employee contribution, salary account debit, EPF payable account credit. But employer contribution on the expense 1,050, EPF expense account debit, EPF payable account credit. But ETF only employer contribution, ETF expense account debit, ETF payable account credit. Now think how to record those information in the ledger accounts. How to record on the financial statement, income statement, and statement of financial position. Think there are 3 expenses should be recorded under administration expense. Salary, EPF, ETF expense. But EPF and ETF payable liability should be recorded under current liability. Any organization, not only sole proprietorships, partnership and company also same theory. Right, record income statement and statement of financial position and administration expense as a salary and EPF as well as ETF expense. Record and administration expense, salary, thing as a salary should be record gross salary. Salary will equal 7,000 and EPF expense equal 1,050 as well as ETF expense equal 350 and administration expense. Think those are administration expense any organization, but EPF and ETF payable under current liability as EPF payable will equal 1,750 and ETF payable also same way. ETF payable also value equal 350. Liability any organization, not only sole proprietorships, partnership and company also same way. Then try to compute other adjustment. We have discussed EPF and ATF. Think additional first one relevant for donation adjustment. When preparing financial statement based on trial balance, adjustment should be done. Think first one is stock donation 320. Sometime it is called trial balance also donation, but in this example not given trial balance donation. Therefore donation it is given only adjustment. Think donation account debit, purchase account credit, double entry 320. Therefore it should be recorded under other expense as well as under cost of sales calculation. Double entry, donation account debit, purchase account credit. Then second one, stock drawings also same way. Drawings not available trial balance, given only adjustment. Sometimes it is on trial balance also, but in this example given only adjustment. Drawings account debit, purchase account credit. Therefore this value should be deducted under cost of sales calculation. Donation and drawings, but donation is expense should be recorded under other expense. Drawings is not expense, drawings should be recorded under equity. Right, record those information based on matching concepts and cost of sales calculation. The stock drawings equal 290, stock drawings 290 and stock donation is given 320, stock donation 320. Think based on matching concept, cost value should be deducted under cost of sales calculation. As well as donation is expense and other expense, as a donation and other expense should be recorded 320. Drawings should be deducted under equity. Think drawings second column within brackets. Drawings should be recorded under equity 290. If it has given drawings in the trial balance, then බැරි වෙලාවත් trial balance එකේ adjustment එකේ දෙකේම දුන්නොත් දෙකේ total එක තමයි මෙතන drawings කියලා දාන්න අපි. Donation also, if it has given both trial balance and adjustment, total value should be recorded under expense, but under cost of sales calculation should be deduct only available in the adjustment. Adjustment එකේ තියෙන ගාන විතරයි මේ cost of sales වලින් අඩු කරන්නේ. Trial balance එකේ adjustment එකේ තියෙන දෙකේ total එක තමයි donation other expense දාන්නේ. Drawings should be deduct under equity.